Hi everyone, Larry Berman here, and here's what's on my radar this week. Well, actually the radar's kind of up here right now as everything's breaking out and making new highs. When we look through our weekly Pro Eyes indicators, we're actually not, despite the new highs, breadth readings are good, sentiment readings, we're not seeing a lot of evidence of speculation. So as we've said for the last month, we think the reopening, the stimulus is going to lead markets a little bit higher here. And I get concerned a little bit higher, 2, 3, 4% higher than where we are now in kind of US equity markets. If we see all the sentiment readings, we start to see divergences. If those things start to materialize as we get through earnings season into early May, then I get very concerned again and say, hey, we've got to batten down the hatches because there's an awful lot of good news priced into the market. So, that's obviously a big weight on what I'm looking at now. Should multiples expand here? Should the markets go a lot higher? Well, fundamentally, no. They seem to be pacified now with the current level of interest rates. We had some gyrations in the fixed income markets. That seems to have stabilized a little bit. Again, from a supply and demand perspective on the fixed income side, the next couple months, okay. But then we have to finance all this largesse, and that, I think, is going to be the next big problem for the market, sucking a lot of liquidity out of markets to fund all that new debt that needs to be done, especially if the Fed doesn't step up their buying, because there is an imbalance coming. It's significant. It's to the tune of a couple $1 trillion. So that's going to be a factor at some point. Again, a lot of excitement over the next stimulus bill. Mitch McConnell fist-poundingly going to fight this the whole way. There are 2 or 3 elements of the package that actually can't get done by reconciliation because you can't specifically earmark certain things in a reconciliation bill. They don't work that way. So it's not going to be easy peasy. There are some challenges ahead, but for the next few weeks, again, I still think we're okay in general. And really, there's nothing else on my mind at this point. So there's some geopolitical things coming up. We saw Russia amp up the rhetoric on the Ukraine. That's going to become a thing at some point. They're going to challenge Biden there. So all these things, similar to a few weeks ago when North Korea launched a missile test and so forth. So we're going to see the new administration tested in many, many ways. Again, for now, not a big problem. At some point, all these things kind of maybe set up for the perfect storm, a little bit higher for markets. We want to batten down the hatches. So our bull and bear pick of the week, how do we best play this? And again, I'm not going to tell you to be bullish on something where it's overbought and looking to get more overbought. That's just not my style as a value tilt guy and growth at a reasonable price. There's not a lot of that out there today. And obviously that can be debated, but I just love these ETFs that have these option strategies and these buffers embedded in them. And I think right now you got to look at being unique and innovative. The 60-40 portfolio in Q1 did 1%. It's not how the 60-40 is not dead, but it's severely impaired. And I'm not sure that balance is going to do it, going forward. You have to get you have to get smart. You have to think like a big pension fund, and how do you generate yield and growth where the market has stresses and challenges. You can't keep relying on multiples expanding because of low interest rates. That's a for sure. Anyways, have a great week, everyone. If you're celebrating Passover, happy Passover, happy Easter, happy Norwuz. If you're Persian, Ramanavami for our East Indian friends, and whatever else you celebrate this time of year. Be with your family, be safe. Apparently Ontario is going into a lockdown again. Have a great week, everyone. Have a good long weekend.